Good evening, good morning, good afternoon to everybody all around the world. Thank you for joining the Graviton Volume 1 Demo Day. We are very pleased to have you here joining us for our very first Graviton Demo Day after 16 weeks of working with the startups that we've been guiding for that. So I will now open up the floor for our CEO, Arpit. Go ahead.
Thanks, Jeffrey. Welcome, everyone. Thanks for joining in. I'm extremely excited to announce that we have successfully completed the first batch of the accelerator program. We call it Volume 1, with some of the best Indian teams that we have ahead. We started the program in November 22, which was last year, with 2 months of application and then 4 months of intensive training. Talking about Graviton, we are a cohort-based intensive foundational learning program, and we have some of the best industry-leading mentors who are always with us to guide the startups as well as us in terms of making the program better. We have 6 startups with us here, which is Strive, GoodGameNation, Fetcch, Zoth, Spydra, and Wall, who will be presenting to you guys, what they have been doing so far. So, Jeffrey, over to you.
Thank you, Arpit. A little bit of housekeeping. The project will have 7 minutes to present, and then there's a 3-minute Q&A. Q&A is of course coming from the participants. There's a Q&A button on your screen. If you type in a question, please start the question with the project that you want to ask the question to, because otherwise that might be mixing up. So please start with that. So 7-minute presentation, then 3-minute Q&A, and let's start with the first one. The first one is Zoth.
Hello, Jeffrey. So let me share my screen. Okay, thank you for the opportunity today. We are glad to be presenting at Graviton. So for Zoth, let me first take you through our journey of Sam. Sam is a crypto enthusiast based out of Dubai. He has been investing in various passive yield generating platforms to earn yield on his crypto investment. But lately the markets have been volatile and Sam experienced a loss. Sam is looking for options in the market, but most of the current passive yield generating platforms have very high lock-in periods. They do not provide sustainable returns because they generate returns within the crypto ecosystem, which is not able to give stable yields. And neither they are able to provide transparency of where his funds get moved around, which makes Sam unsure where he would get his yields from. Presenting Zoth. Zoth empowers crypto investors get secure and sustainable yields from emerging markets, which are low yield and fixed income. Let me show you how. At Zoth, we bring fixed income, high yield on our marketplace, which have early exits without any lock-ins, and they provide real yield from real businesses. We are compliant and regulated across multiple jurisdictions. We support some of the major cryptocurrency as well as stable coins on our platform. And we offer up to 20% low risk, secured and insured yield on our platform. I'll give you a sample overview of how that works. See here, Sam logs into the Zoth platform. He completes his initial KYC process and then looks into an interesting invoice factoring pool that is currently available at Zoth, which is from a Fortune 500 customer offering 12% annual return. Sam invests his desired amount in any major cryptocurrency that he wants. Zoth supports all major cryptocurrencies. After completing his investment, Sam is able to get an overview of his investment as well as the return that his investment is generating on our sleek dashboard. The returns which we generate at Zoth is not from within the ecosystem, but from invoice factoring and other stable income products from real world assets. All our yields are insured by some of the top insurance providers in the world, and they are only listed on our platform after a thorough due diligence that get completed by us. We are currently bringing trade finance and global trade finance based invoice factoring pools, which have some of the lowest default of 1% and have a track record of 30 years and is a very popular product in the traditional finance space. However, at Zoth, we are bringing this in the on-chain world. For the entire off-ramping, on-ramping, as well as managing the risk management, as well as the crypto management part, we charge a fee of 4% or over 40% margin. Zoth is the only asset tokenization company in India to be part of the regulatory sandbox, and we are also working towards an exemption from MAS. Our key proposition lies that we are able to offer not only minimal lock-ins, but low volatility with high yields on our platform. The current DeFi yield generating platforms, most of them have either very long lock-ins or have very high volatility, which most of the high net worth individuals, crypto degens, are not very unsure of investing going forward. Our Zoth token forms the core of what we are building at Zoth. Zoth has primarily two tokens. One, an asset token, which is 1:1 pegged to the underlying real world collateral, and the platform token, which forms the core of the innovation that we are driving at Zoth, which includes areas like liquid staking pools, which, although very popular in the crypto space, have not been used in the real world. Zoth is creating these innovative liquid staking pools, allowing our customers to get immediate liquidity. And staking and other features which provide incentives for our market makers to provide liquidity to our customers. The total digital markets is growing heavily, and even in a bear market, large institutional capital is coming to DeFi, with the recent announcement by players like BlackRock and Fidelity. However, DeFi lending also has been growing at a huge speed, and we feel at Zoth we are at the right space to grow this even further. Zoth has been built by me and Kaushik. We both are ex-Budweisers. I have the experience of running a high net worth individual network with over 1,500 investors and scaling it up across different markets. At the same time, had the opportunity to build a fintech and lending product with scaled across multiple emerging markets. Kaushik is a Web3 expert and has a strong blockchain experience across Berkeley. I also had the opportunity to work with multiple blockchain clubs at Stanford and other global universities. Our team brings expertise of fintech, lending, and Web3, which we combine as we build this unique product for our customers. It has been just a month of our launch, and we have already closed liquidity pools of more than $500,000 with partnership with some of the biggest players like Cheetah and Spydra in pipeline, as well, and another 2 million in process. At the same time, we have been able to create an impressive pipeline of borrowers with current pipeline of 7 million, current pipeline of 1 million and over 7 million in progress. Trade finance is just the start. At Zoth, we are building an entire end-to-end ecosystem which takes care of global trade finance and at the same time providing unique opportunities for crypto investors to engage with us. We are raising 1.5 million with more than 50% already committed and soft commitments in place. And we are looking for believers who believe in our vision to make finance fairer across the world. Thank you.
Thank you, Zoth. Q&A, any people in the audience that has a question, In the meantime, feel free to type it for Zoth. In the meantime, in the chat, you can see a little excerpt of Zoth, but also a link there. In the link has more information about Zoth and Zoth only, about their metrics, what they have done inside of the cohort, but also a download for their deck, a quick video, and also very important, a link to their schedule. So at that point, if you want to know more about Zoth, feel free to schedule a meeting with them through that link. So click on the link in the chat that has more information about Zoth. And if you want to get a meeting with them, there also is a possibility to plan a meeting with them through their schedule link. Any questions for Zoth from the audience? Feel free to type in the Q&A. And otherwise, feel free to go through the link in the chat towards the Zoth page. On the Zoth page has a lot of information, additional information about Zoth and the project. Then thank you very much, Pritam, for your presentation. Looks like there's one question in. What is the license you have talked about from SEBI and RBI? Can you answer the question, Pritam?
Yes, so we are part of the Web3 sandbox in India. The current licensing in India is still under preparation, but we are only the only asset tokenization company to be part of the Web3 sandbox.
Thank you. Then we quickly go on. If there are no more questions, then we quickly go on to the next one, and it is Spydra.
Oh. Hi guys, I'm Manish. I'm one of the founders of Spydra. Let me just quickly introduce my team. So prior to Spydra, I have been part of successful 2 startups. My first company was Scoops.com, which was an e-commerce space, got listed in UK Stock Exchange at a valuation of $100 million in 2013. My next startup was Pocket.com, which was into ad tech, got acquired by AnyMind based out of Japan. My other co-founder, Ashwath, we are both batchmates from IIT Varanasi. Prior to Spydra, he was working in Microsoft for 16 years. Kevin Shaw is a chief revenue officer who is part of our US team. And prior to Spydra, we had worked in Tawant and KPMG kind of companies. Satish is our head of growth and strategy, and he was working in Raymond before this. And he has been passed out of ISB and IT KGP. When we talk about the multi-party system, let's say there are multiple organizations, trust is the most important facet of the most important component of that. And we believe that blockchain with a single source of truth is the most potent solution for it without trusting anyone. You don't need to trust to build this kind of solution. And that's what the genesis of Spydra is. When you look at the blockchain opportunities, if you just segregate in 4 or 5 different sections, so layer 1, layer 2, gaming, NFTs, identity management, DAO, security. But asset tokenization is the only area which touches all the traditional businesses, and it has the potential to revolutionize how organizations store, manage ownership, or transact with those assets. And that's why we chose asset tokenization as a problem. When you look at the market opportunity, right now, according to the research, asset tokenization is market is increasing at a rate of 87% more cumulative aggregated growth rate. The total addressable market is around 94 billion. What we are after is the obtainable market, which is around 420 billion in next 3 to 5 years. Now, why enterprises need asset tokenization? So there are 4 fundamental reasons why. Operational efficiency. In blockchain, typical traditional systems, you need a broker or you need a middleman. Blockchain efficiently removes it, and then if it makes it super optimized and increases the settlement times much faster. Asset fractionalization is needed where there are high value assets, and let's say there are high entry barrier, and let's say they can be represented as tokens, which then can be afforded by a much larger, broader base, thus increasing liquidity and unlocking a lot of value. Blockchain has an immutable record of ownership, asset ownership, and transactions around it, thus making it tamper-proof and fraud-proof. So wherever there's a requirement of that, blockchain solves that problem. Global reach. Any asset which can be represented by tradable tokens can be then traded globally, thus increasing a lot of global opportunity for cross-border investments. When we look at the different industries where asset tokenization is now being used, it ranges from physical objects like pharmaceuticals, consumables, supply chain, precious metals, to fintech, which can call real estate, equities, bonds, and also to intangible assets, which are like trademark, intellectual properties, royalties, copyrights. According to the market research, around $5 trillion value of assets will be tokenized by 2030. Now, why the problem? Why asset tokenization is needed as a platform? Setting up of blockchain infrastructure is still very, very tough. It's not that straightforward. Even the solutions that are there have not solved that problem to that ease. And also building a smart contract, building that tool itself takes time. It's not a one day task, or it's a continuous activity where you have to upgrade it, where the system has to scale accordingly. Third, the solution has to integrate with different kind of systems, because it's a blockchain layer which is getting added with Web2 companies. So the solution has to work with different systems. Managing all these three facets is very, very tough. Now, what is Spydra finally? Spydra is basically a low-code, highly configurable, easy-to-use asset tokenization platform for mid to large enterprises. And that's a problem we solve. It's built on 4 fundamental properties. First is our infrastructure. On a single click of a button, you can launch infrastructure across regions, across clouds. There are a lot of levers which are allowed, but for you managing infrastructure becomes super easy on Spydra. Deployment is where you have to just enter your business settings. You have to define your permissions. You have to define your workflows, and be it any use case across different industry, a smart contract will be auto-generated and will be deployed in a network. Once the smart contract gets deployed, how to use it? We have given different ways to integrate that smart contract with your existing system. You can integrate it using through REST APIs. You can integrate it using our automation tools like Zapier or Power Automate. And also we have given out-of-box connectors for applications like SAP, ERP, Dynamics, or you can say Salesforce, and even with a Google Sheet. Then comes our last part, is the dev tools. We've also done a lot of engineering where we have created these dev tools, Graph Query, which gives you to query the database, debuggers, analytics, which makes the developer experience very, very easy. Let's look at some of the case studies which we already have. Raymond is the biggest textile manufacturer. They have used our asset tokenization platform to tokenize around 12 million assets on chain. They're using it to basically for anti-counterfeit in the supply chain system, and also to give loyalty points to all the participants in the system. Myntra is the largest fashion e-commerce company of India. They are used right now. It's an integration phase where they're going to use a product for providing transparency to all the participants in the supply chain, and even to the customer for their in-house brands. And the next category they are going to add is cosmetics. They are using our plugins for SAP and Zapier to connect to their existing stack. Autoverse is another company which is basically revolutionizing B2B car supply parts. And they wanted to create that whole transparent layer from the source, from the manufacturer till the end customer, which is the garage owners. So they are using our asset tokenization platform to basically tackle, to create this transparency layer, and also use it to tackle and counterfeit kind of stuff if there is in the system. Our model is fairly very simple. It's similar to AWS Azure, where you are just charged on the number of resources you're using. We are giving a free $400 worth of credit for the first time user, just to let them use our platform. These are the number of customers we have right now. Few of them I've already mentioned. Others are some partnerships which we have. We have raised a round of $2.2 million with some noted angel investors and VCs. We are looking to add another $1 million to our round to scale our market in India, USA, and Europe. We have also plans to add new features into this and to improve more of brand visibility and marketing. Thank you. That's all. Thank you.
Thank you, Manish.
Yeah.
Any questions for Manish and Spydra? You can type your questions in the Q&A, please. question from Jung Chang Chung. Who are your competitors?
Hi, yeah. So in terms of competition right now, there are different kind of players where they're offering full stack kind of solutions. If you look at enterprise blockchain space, specifically in the technology which we offer, Kaleido is one player which we call ourselves as competition, but then they are not end-to-end providers in terms of providing the complete asset tokenization platform. If you want to compare apples to apples, so something similar which maybe Alchemy is doing in the public blockchain space, where they have created some direct solutions which can be used by normal Web2 companies or Web2 players. So yeah, so something we can't find an apples to apple comparison where nobody's actually doing something similar like us, where they have created this low code platform. But yeah, there are different flavors of it, more towards the infrastructure side or towards the public chain side.
And if you have longer questions and that it takes a while to type, feel free to go to the Spydra page in the chat. There's a link to the Spydra page that has already more information, and also at that point a download for a deck, but also a very important schedule link, so to get an appointment with the team of Spydra and then you have all the time that you need to answer any questions. So questions can be typed in the Q&A. There's another question coming in. What's a typical proof of concept or pilot cost?
Yeah. So because we are a low code platform for the blockchain layer, it's almost no cost. Customers can come in, just create their own asset tokenization. If they, let's say, have a use case around insurance, let's say I have given you use cases around supply chain. But let's say if they have a use case around insurance where they need to tokenize for claims, they can come on the platform, create different kind of assets, create different workflows, and that's it. So to create that blockchain layer, the POC is almost as good as free. So you can create different kind of use case across industries. The blockchain layer will be entirely free. Obviously, if there is, let's say, some custom integration which needs to be done through it, that also where we have worked. I had already explained in the slide that we have out of the box connectors which can work. So if there is no custom work required, it is almost as good as free. You can just you will be getting charged only for the resources, the nodes which you use. So that blockchain layer is only pay as you use, and that's how we have made the platform as configurable as possible.
Okay. Thank you, Manish.
Thank you.
Any questions? If there are no other questions coming in, then thank you very much for your presentation. Again, if you have any questions that are too long to type in, feel free to reach out to Manish through the page that is shared in the chat. There's way more information about Spydra than we can even share here. So thank you very much, Spydra. And then next one up is Wall.
Hey guys, happy to be here talking to everyone. Quick introduction about myself and what we're building. I'm Anuj, CEO and co-founder of Wall. At Wall, what we are building is helping essentially communities to drive their community members through the right set of actions which they would want to do. To give a quick background about how did we even arrive at this thing. When we started in 2021, we wanted to build something in the NFT space and were really keen on building for that use cases that are upcoming in NFTs. So we started with building a social feed for people to discover what are the things people are buying and discovering new communities and OG collectors and things like that. And when we started building this, we realized that, okay, people are interested more about learning about what the people are doing and understand a little bit more on the analytics side. So in that context, we had released a couple of products. And for these products, when we wanted to get engagement and activity, first we had to get viral on Twitter, which we did. And then we had them to try out the product and then for them to eventually join our community. So it was a step-by-step path, which was kind of very complicated and difficult between multiple platforms. And even when some of the top traders like Dingaling and Sweaty Ninja Pants had actually joined our community, we couldn't identify them out of the 5,000 or 10,000 odd people who joined. In that context, we realized community building is a hard problem for every project. Even though they have that ideal path, there are these missing pieces in terms of interlinking between them, verification, which kind of makes it difficult for them to build that community effectively. Since August 2022, we've kind of pivoted and started focusing more on this problem and trying to help projects with that. So at Wall, we help projects drive community action through quests. Let me kind of break down that for you in terms of how does that help. Now, imagine a project which has a definitive process in terms of, okay, I want to educate my user base, a new chain which is launching, let's say like a Shardium, which wants to educate them about what is Shardium about, what are the different things that I need to do in terms of joining community, and then the testnet activities that I would like to participate in. So first, a project would sort of define these different stages, and then step by step set the specific actions which you want the user to perform, which are typically called quests. And for completing of these, people are earning XP, and upon these XPs, they're kind of competing in these leaderboards, and then projects and communities can define what sort of rewards do they want to incentivize, whether that's a native token or a stable coin and NFTs and so on and so forth. Fundamentally, we help with acquiring and retaining community members. And the other part is aggregating activities across all these touch points, not only the things which are flowing through the quest, but also let's say someone has done an X amount of on-chain activity, you'd want to quantify that by saying for that you get an X amount of XP, and which eventually translates into a token. And this helps projects actually understand the community analytics to who are the people who are most contributing and so on and so forth, and which helps them optimize their channel efficiencies, spend LTV per CAC for the different channels which they're using. So we help with educational, social, on-chain, and app activities. There are inbuilt gamification modules which you can use to engage the user base better, all sorts of rewards. Apart from them showing up on the wall, you can extend that as an extension to your platform. And the other thing is you can actually distribute these quests into our channel partnerships, through which you can also get distribution apart from which what you get from wall. So in our 5 months of journey, we have worked with about 35 plus projects, did about 65K plus wallets and 250K plus tasks, and distributed about 5,000 rewards. In the whole context of our partnerships, how does it work is essentially we work with a freemium SaaS model where creation of the social quest and on-chain social quest is a free trial, and then for creating on-chain quests and API extension comes in the paid plan. And we also work one-on-one with projects to customize solutions for their growth requirements. So apart from the product and the distribution that we have the distribution channels. We also where we charge a 30% revenue. We have taken from a go-to-market standpoint, we have taken a top-down approach where we partnered up with L1s and L2s and exchanges which have a massive growth potential. We are currently working with Shardium to work with their testnet launch and then say an Aptos networks. We also have a distribution network in terms of influencers and game networks, which we push the quest to. And the product extensions, we're enabling the questing not as an isolated platform, but actually within your product, within your community through APIs and offer walls and Discord bots. And that's how we have kind of also have differentiated ourselves from the market. The market is actually some of the top players like Galaxy and Zeely has proven that questing is a use case, which is a big use case for that funnel. And now we are going one step ahead and making it, enabling it within the product use cases and through that extension. The market itself is a $1 billion market as of today with about 40 million user base. And talking about the team, I am a IIT, I am graduate, worked at Ola as an EA to CEO, built out the leasing business, scaled it to 12 cities. Also has worked, built on a real money gaming product, been a professional poker player. Amar, my co-founder, has been very much into the crypto space since 2017. Previously, he was a serial entrepreneur, and then in crypto, he's kind of worked in decentralized VPN and worked along in that space. And Shubhank is our engineering lead, and Namita comes with a experience in BD and from IIM Calcutta. We've been previously backed by some of the top founders in the space, Polygon by Economy Persistence, Builders Tribe, and the funds like Woodstock and Lancer Capital. In pre-seed, we have raised about 1.165 million. We have done this through a SAFT, and currently we are raising a 1 million, out of which about 200K have soft commits and some more in the previous conversations. In terms of how do we kind of utilize this is to kind of get a roadmap to 100K MRR. How we kind of envision this is through enabling the tooling to the projects to be able to do questing within their thing, and then reaching that through our network, enabling a distribution of about 1 million monthly active users. What we fundamentally see is a shift in terms of advertising. Instead of you sending them to a platform or a place where the user has to figure out their journey, I think communities more and more going to start use questing as a way, as a front end to their advertising piece, and better understand the funnel and better understand the conversion rates, LTV, CACs, and all of that. I think, and this is where the next big inbound of users that's going to come is going to be distributed to this, and we want to be part of that. So yeah, that's largely about Wall. Would love to kind of take questions and deep dive into some of the questions in the Q&A. Thank you for your time. Happy to take any questions you might have.
Thank you, Anush, for your presentation. There are 2 questions, both from Akina. 3 questions by now, but first question, can you give a sample customer project?
Absolutely. So if I can just show you an example of the current use case itself. So to talk about actually one of the projects which is there in the part of this cohort, Strive had actually run a project with us where they would basically, first thing is, what they wanted is education for their community. So what they started off with is an educational quest where they could educate users about what are the things that they would want them to learn about, and then have a Q&A through which they kind of reinforce that learning. And then there is the community part of it. So maybe if I take as an example of like a project like this, this is a community quest where they would want them to join the different parts of the community and sort of do these different activities. So these are tasks that you would sort of go do and then verify, and that verification would happen. And once people kind of complete this, then there is an leaderboard in which they are kind of competing, and there is also referrals and inbuilt modules. So activating testnet activities, joining different social activities, DApp activities, and so on and so forth. I hope that answers your question a bit. Can deep dive into in the private conversation.
Follow-up question was that, and how is it different from OpenSea?
Oh, yeah, I mean, I think OpenSea is a completely different context. I think it's an NFT trading platform. What we are is a community action driving platform. I think it will be more similar to a Zeely or a Galaxy, where the actions, what you would want the user base to do is basically broken down, and you kind of go do these activities to participate in those communities.
Okay, and then another question, how do you make sure that users are real people and not bots?
I think this is one of the most important questions from a project standpoint, right? This is where their LTV for CAC is sort of justified. So a few things. One is whenever a person is on Wall, they are supposed to verify with an existing social along with their wallet, which when they kind of, so obviously it's not the most, there is no way for us to really know who are bots and not bots fundamentally, but when a wallet is linked with a couple of socials, that is as close as we can say, like, okay, some person is not necessarily going to create like multiple thousands of wallets as well as socials and so on. So that's one way. And the second thing is what we are tapping into here is actually our key differentiator. I think a lot of the people today in Web3 in the questing are sort of the same people which are circling from one ecosystem to the other. What we are doing differently here is tapping into existing distribution through Web2 and Web2 networks, where we are tapping into the gaming network, where it is like really going in as an ad inside a game sort of a thing, which is where like the real users are. And then we are making them onboard onto the platform, actually getting them the first wallet and so on and so forth. Yes, Daniel, we are kind of a competitor to Zeely in a sense. For sure, Zeely is one of the closest competitors that we have. There is sweep widget Gleam already used in most DeFi, including NFTs for whitelist purposes. Just want to know, Quest is providing similar attributes, but of course it's a platform with user profiles. Is a fee charge for setting up a project? Yes, absolutely. So I think Gleam and sweep widget have kind of outdated in terms of utilities. They although they have a lot of integrations in terms of Web2, there's a lot less support in terms of the Web3 side. Questing, when combined with wallet analytics, is a powerful piece because it actually enables your marketing stack like really well in terms of your understanding your CACs and LTVs and sort of distribution of who the user base and so on and so forth. And actually seeing what sort of personas are most probable to convert into the deeper funnel versus what sort of people will just come and go. So that is sort of our key focus. And yes, we do charge in the paid process. It's a SaaS model where it's ranges from 99 to 499 based on the different features that are there. Currently, we have A/B tested with our revenue model. We've got in about $2,000 in revenue already, and we are now going more towards the SaaS model.
Okay. Thank you. Thank you for the questions. If you have additional questions in the chat, you can find the link to the wall page that has also the link to their scheduling, but also at that point more information, the website, and of course their deck. So a lot of information there about wall. Thank you, Anush, for your presentation. And then I want to invite Strive to come on stage.
Karthik, you're on mute.
Awesome. Hi, everyone. I hope everyone's having a great day. My name is Karthik, and I'm the founder and CEO at Strive Network. And at Strive Network, we are building layer 2 infrastructure for NFT utilities. And how we got to this problem was that last year we launched our own NFT collection, which basically sold out instantly. But once we sold out, the cracks started to appear in the NFT space for us. We basically developed a bunch of utilities like staking, raffles, airdrops, art upgrade, and so on and so forth. It cost us upwards of $50,000, almost up to $75,000, and several months to deploy these utilities. For our community, which had about 45,000 people in it, we had about 4,000 holders, and 1,000 people actually only ended up using these utilities. So we saw that the ROI in developing these utilities and promoting them was very, very low. So we went and spoke with several other projects and saw that thousands of projects face this problem. They struggle to grow, retain their community. And as a result, they kind of disappeared last year, as we saw in the crash in the NFT space. The market was very, very irrational. Most of the users in the NFT space were more interested on the investment side of things and were not particularly paying attention to the utilities being developed. And lastly, NFT holders wanted customized models of ownership where they could access certain utilities, also get benefits of investment, and continue to interact with utilities at certain levels, but not at all levels. So we came up with Strive Utility Protocol to solve for these problems in the NFT space. Using Strive Utility Protocol, NFT holders can now rent, share, trade the utilities that come associated with their NFTs. Projects can create, launch, deploy utilities for their NFT collections continuously without having to launch new collections. And lastly, Web3 communities, NFT degens can continue to engage with projects and their utilities without having to shell out thousands of dollars in the investment side of things. As part of our product stack, the Strive Utility Protocol has its own utility marketplace, which is the first of its kind, where you can buy, sell, rent, trade the utilities that come associated with NFT projects. So now, for instance, if you have a Bored Ape Yacht Club NFT, you can now sell the utilities that come with your BAYC, or you can buy BAYC utilities without actually having to shell out $100,000 or $80,000 in the market. So if you have a BAYC, you can monetize on the utilities that come with it. For instance, you can sell your access to merchandise, events, gaming, staking, and airdrop, and continuously get value from the utilities that the project is developing on our utility marketplace. We also have our own SDK with which projects integrate with us, and further, their holders can then interact with our marketplace once the developers have integrated with our marketplace. And then lastly, we have our own launchpad where projects, creators, dApps, and brands can come and create utilities and engage with Web3 communities and grow their community. Our protocol has several other features which are very, very essential for NFT projects to not only grow, but also survive in bear markets like these, such as NFT analytics, which will be very important for NFT users to make buying decisions, a Strive utility score, which is basically like a credit score and builds credit worthiness for NFT projects and prevents scams and drugs in the space, and a royalty program, which helps NFT projects increase their revenue. Every time a utility gets traded, NFT projects basically earn a royalty and increase their revenue, similar to how when NFTs get traded, they earn a royalty. So here are some of the product screenshots. We are currently in testnet. This is the analytics dashboard where users can see the analytics around utilities being traded and claimed, which helps in making buying decisions. Because today, it's very difficult to make buying decisions around NFTs, aside from word of mouth or art, and basically simple information on websites. This is the user dashboard where you can see which utilities you have traded, claimed, whitelisted for, and many more things. And this is the dashboard where you can come and buy utilities and find details about the utilities. So this market is large and growing. There are about 130,000 NFT projects on Ethereum and Solana, which are the largest chains in terms of NFT volumes. But there are other chains also that we will be targeting in the future. Out of this, we are targeting about 10,000 NFT projects, which have active and growing communities with strong utilities. So far, this market is growing at 40% CAGR. And there are about 30 million NFT holders globally who have invested in NFT projects with utilities. A total of $6.5 billion have already been invested in NFTs with utilities particularly. Our target audience is NFT projects, Web2 and Web3 brands, dApps, as well as NFT holders. Of course, we are not alone in this space, but we are definitely different. One of the biggest differentiation factors is that projects like Stream NFT and Renty use a rentals model in which your NFT essentially leaves your wallet. And that's not the case with Stripe. When you have a $100,000 Bored Ape, you don't want that expensive asset leaving your wallet. So Stripe enables that. You retain your asset in your wallet while still being able to monetize on the utilities that your asset has. Furthermore, there are projects like Tropy and Cardinal, which are kind of leading in the space currently. However, they don't have their own marketplaces where utilities can be traded by holders. On these platforms, you can simply create new utilities, but the utilities cannot be traded. So we are the only and first platform with its own utility marketplace where utilities can be exchanged and traded amongst Web3 users. Our revenue model is fairly simple. We have a SaaS model where we charge about $99 to $499 as a monthly subscription from NFT projects to interact with our SDK. We also have a 10% fees for projects that launch utilities on our launchpad and a 1% transaction fees on our marketplace every time utilities are traded. We're going to market in 4 different ways. One is our utility score, which basically helps NFT projects build credibility in the space, which is one of the biggest factors today. If an NFT project does not have credibility or credit worthiness, it's very difficult for NFT buyers to make a decision around it. Second, we have a royalty program. So today it's very difficult for NFT projects to continuously increase their revenue. And our royalty program allows that. Every time a utility is traded, they earn royalties on it. We have our own native token, which is the STRV token, which we are using for airdrops as well as incentive programs. And we also plan to launch a grants program and accelerator where we will be guiding brands, dApps, and projects around utilities, which utilities they should be deploying and giving them grants around their progress. Last month, on June 1st, we launched on testnet. And so far, already 7,000 plus wallets are interacting with us on a weekly and daily basis. 10,000 plus utilities have already been created on our platform. We have about 15 plus projects that have signed LOIs with us. And we're also in talks with platforms like Magic Eden and OpenSea to be able to partner with them on the NFT analytics side of things. As I mentioned, we're currently on testnet. We have done 2 phases of the testnet so far, which is the user phase and the projects phase. Now we're entering the launchpad phase where we will be deploying the launchpad on our testnet, where projects can then come and create utilities and launch these utilities. We also plan to go into mainnet in the next 2 to 3 months. And we are working on building a no-code dynamic NFTs platform that will also come in Q1 of 2024. Our team comprises of me, Sanita, who is our CTO, and 10 other folks who are part of our team across India. I'm ex-UC Berkeley. I did economics and computer science from Berkeley. And I was also a researcher at UC Berkeley's blockchain lab. Previously, I worked at Deloitte Consulting in San Francisco in their blockchain team. And I've also worked for a layer 1 infrastructure project, helping them close partnerships with companies like Samsung, LG, Nokia, and many more. Sanita has worked at Tech Mahindra, Richmond Dow, Almora, and several other startups on the tech as well as quantitative analysis side of things. We already have backers such as 100x, Let's Venture, Geo, GrowX Ventures, Zepay, and many more who have committed $500,000 in hard commitments for our current seed round, in which we're raising $1.5 million at a $12 million valuation, which will primarily be used for product development, launching the Strive token, brand building activities, for our grants and accelerator program, and many more things. So we look forward to speaking with you. We're looking for strategic investors who will help us go to the next level and revolutionize the NFT industry and make it mainstream. Thank you so much. Open to questions now.
Thank you, Kartik. There's a question from Yung Chang Yung. So if I owned an NFT that grants me access to a membership-only restaurant, I could rent this utility to another person and earn money. How does this process look like?
Yes, so if you have an NFT that grants you access to a membership-only restaurant, you can rent out this. You can easily rent out this utility. So our protocol is basically EIP 5496 inspired protocol, and you basically how it would happen is that you have the NFT in your wallet. You would come onto Strive network, you would connect your wallet, and you would create this utility, provided that the project is partnered with us. The project has to have integrated with our SDK. If your project has not integrated with our SDK, then essentially that functionality cannot work. So we have to directly go and partner with the project that has issued that particular NFT. Once that happens, then the holders of that NFT can come on our platform and create a utility. So for instance, you can then name the utility access to certain restaurant, you can price it, you can create a sort of expiry date on it if you would like, you can create a bidding and auction process around it as well, and other holders can come and buy access into it. Because there is an SDK integration with it, that gives a read-only access to your wallet, so your wallet is not essentially compromised, and the new holder who buys that utility is able to redeem it at the restaurant itself.
Okay, thank you. Another question from Daniel. Strive. How could existing projects adopt this design with minimum additional developments?
I'll take that question. The existing projects have need not do anything to come and integrate with Stripe. It's a self-onboarding process. They just have to connect the wallet through which they have deployed the NFT collection, and we'll be assigning that as an owner. And our protocol acts as a utility wrapper for the existing NFT collections to deploy utilities.
Okay. And there's another question from Jun Chan Chung. What is the incentive for NFT projects to partner with you?
So one of the biggest incentives is obviously expanding their scope of revenue. As we know, it's very difficult for NFT projects to generate revenue. Their biggest source of revenue is obviously the mint funds that come in, but post that they have to spend those mint funds and it's hard to generate revenue. So using a royalty program, they can create a royalty of ranging from 1% going up to 10%. And every time a utility is traded, they get royalties deposited into their wallets. The second incentive is, of course, access to a larger community. Now we know that today, if you look at any of the bigger projects, they are not just projects themselves. They're building companies in the back. They're looking to launch products. And that is definitely something where they need to find product market fit. With your 2,000 or 4,000 holders, it's impossible to do so. It's impossible to find product market fit. So one way to come on Strive is to find product market fit and find new users who would actually engage with your utility instead of just flipping your NFT and seeing the investment side of things. So that's the two biggest is basically increasing your scope of revenue and finding new users who will essentially help you guide you towards product market fit.
Okay, and then the last question from Chim Wen. How difficult is it for a new marketplace to add utilities for NFT collections?
Currently, obviously, like if you look at the traditional marketplaces that are OpenSea and Magic Eden, they don't allow for any NFT collections to add utilities. The utilities are currently, in fact, not even on-chain and verifiable. So we are one of the first protocols to make utilities on-chain and verifiable. Utilities are currently just purely word of mouth. So a project launches and then they promise you that we are going to launch these utilities, but then they never come on-chain or they never see even the light of day, essentially. So on Strive network, you can essentially create these utilities, put them on chain, they're verifiable, users can go on Etherscan and verify if this utility actually exists. But none of the marketplaces like OpenSea and Magic Eden allow for this functionality as of right now, which is why we are looking to partner with them, where we enable this for the holders or the users on these marketplaces. So that's why we don't actually compete with any marketplace. We don't compete with OpenSea, we don't compete with Magic Eden. We're actually a potential partner, or even like we will be having enterprise partnerships with companies like OpenSea, Magic Eden, any of the marketplaces. So they can integrate with us, use us, and make additional functionalities available for their user base, which will essentially help their users make better decisions, buying decisions, increase user activity, as well as reduce the number of scams and rug pulls that happen on their platforms.
Okay, thank you very much. There are two other questions, but you can use the typing of Q&A session for that to answer them or direct them to call with you. Then the next session would be GGNation.
Thanks, Jeffrey. Good evening, good afternoon, good morning, everyone. I'm Abhinandan. I'm the founder of GoodGameNation. So we are India's largest collegiate gaming platform for both Web2 and Web3 game publishers. What we mean by this is essentially, we have an app that web student gamers, specifically those in colleges, set up gaming clubs, and they are competing against each other in the most popular Web2 games at this point in time. And we are working with our first set of Web3 games right now in the coming month. Why are we doing this? Primarily because across any kind of game publishers that you have invested in or interacted with, what you will see is the channels of acquisition, onboarding, engagement, retention are pretty much the same, and they're overused, leading to extremely broken lines when it comes to sort of retaining users. And in today's sort of market, where you have not just sort of many games in the same genre or new games competing and challenging legacy games like a Counter-Strike versus Valorant, you also have a completely new technology like Web3 that is sort of, questioning the entire sort of network value of what Web2 games stand for. And that is why it becomes very, very important to move away from sort of standard mechanisms of acquisition and engagement and actually truly build communities and be sort of culture driven, so that the user group or the cohort that you build of your gamers sticks around not just for like a small time period, but also it becomes a legacy that can sort of self-replenish itself, which is what led us to sort of building GGNation in its current avatar. As you can see, the solution that we're providing is a platform which is app-based, community-led and competition-driven. We are set up in 600 colleges in India so far. They're also now expanding to other markets. Of these 600 colleges, we have an official partnership with over 300 of those and a community of 500,000. Our app, which we launched in March, has over 200,000 downloads with about 50,000 monthly active users, predominantly engaged in competitions at this point in time. We are also expanding to other product verticals like curriculum, which will be not just in the gamut of gaming, but also sort of Web3 education, and also go down the route of coaching as well. This is what our product looks like today. We have a user profile to onboard users, the gaming clubs where they can sort of be clubbed into tournaments on a daily, weekly basis that they can compete in for free. So we don't have pay-to-play tournaments. It is all free to play, so as to speak. I will come to a business model and we'll talk about how we monetize this. And of course, there are rewards being given for actions performed on the platform and also in-game challenges. The market is big. Our idea is to capture 100 million annual revenue in this within the next 3 to 5 years. Pretty much every gaming company can be seen as a potential competitor because the student gamer forms 80–85% of the gaming population. But specific to building these cohort-based models, we've got about 3 other companies globally that are focused in this segment. As you can see, they've raised far more money, but we've achieved a lot more with the money that we raised previously. And also have these official partnerships with colleges and education institutions, which in the long run for us builds a lot of defensibility and moat, being the first mover in the Indian market. We primarily make money today through sponsors, advertisers, and games paying us directly. And these are the three verticals of monetization that we've already experimented and successfully monetized. We will also open up subscriptions like tournament passes for users to get unlimited, unrestricted accesses to a number of tournaments, and also the prize pool that they can compete for on a daily, weekly, monthly basis. Bottom left, you can see some of our current brands that we are associated with, some of the partners that we have. And of course, in pipeline, we have over $1 million from both games paying us a monthly access fee and also brands paying us for network access now. My background prior to this, built 2 sports leagues with distribution of $1 billion globally in over 100 countries. My co-founder Manan has been in the blockchain ecosystem for over 6-7 years now, and worked with multiple companies on their token and product strategies. My other co-founder Haryansh was a competitive Call of Duty player for Northeastern University in Boston. Also ran his family office, which comes from his family business that is a leader in the auto tech space in India. We're raising $1.5 million at a 10 mil valuation, and a 750K already committed, and most of that money even coming in already. And primarily this money is going to be used to scale our existing go-to-market plans. Our college partnerships, which we intend to get to about 1,500 colleges in India alone by the end of this year, and a further 500 in the Middle East. And of course, add more functionality to our product to streamline other offerings for us. For instance, our coaching programs, curriculum programs, but also launch our questing mechanisms, which will later lead to our token generation event in Q2 of next year. So that is us. Thank you so much for the opportunity, and happy to answer any questions now.
Thank you, GGNation. Any questions for GoodGameNation? If not, there's in the chat, there are links to the GGNation page. As you can see there, they have over 200,000 gamers, and they have a lot of colleges across Indian cities. Feel free to reach out to them using the link in the chat. That page also has the deck and additional information about GGNation. So thank you, Abhi, for your presentation.
Thank you.
No further questions. So at that point, I want to ask Fetcch to come on stage, the virtual stage.
Yep.
And
Hi, Jeffrey.
hi.
Yep. I'll just share my screen. Awesome. Hi, Jeffrey. Thanks. Hi, guys. This is Mandar this side. I'm one of the co-founders of Fetcch. We're building a middleware layer to bring adoption of full payments into the Web3 ecosystem and make a easy streamline the payments and make a user experience. Along with me, I have my co-founder Satyam. He has been into the blockchain tech since last 6.5 years, worked with Olympus DAO, worked with Comet as a lead blockchain developer, and previously had built his own startup as well. I majorly come from building background itself. I have built my first startup, which have also got acquired one of the US company called as Mindbrowser. After that, I have built my second startup in a health tech space in India called as China Health, and have been serial builders since into the Web3 ecosystem. Whole team has a previous background of building into the Web3 ecosystem since last 1.5 to 2 years together into the payments ecosystem mainly. We build payment gateways and few other great products and scale them at a scale. Current vision with Fetcch is very clear. We are building a middleware layer to revolutionize and bring the pull request payments onto the blockchains. In a simplest way to say, it is a decentralized Visa network for a peer-to-peer transactions. If you have seen into the Web2 ecosystem, payment request or pull payments has played a very massive role in any type of transaction experience today we do. Debit or credit card types of transactions or any type of PayPal, Venmo like transaction, if you have seen, they provide very simplest user experience because they have payment requests integrated at a protocol level by a Visa, MasterCard, or at application level by applications like Venmo or PayPal. But in Web3, it is not possible. Currently, we only on a blockchain do push-based transaction, which has a very complex user experience. And pool payments are not possible because we have very complex cross-chain settlement, and they are fragmented and very risky. Secondly, transaction identity is much more fragmented on a different blockchains, and payment applications are not very well synchronized just to make a data transfer and a transaction data transfer between all of them. If you observed, I'll just give a brief example of how current P2P social transaction looks like and why current infrastructure is designed forces to be a very messy user experience. Think about if I'm supposed to send some Ethereums to my friend on to his wallet, and I just have Solana on my Phantom wallet. The user experience of doing the transaction goes like, I will have to go to any bridge or aggregators, swap my tokens there, take those tokens into my Solana wallet, Ethereum wallet, ask him for his wallet address, paste that wallet address into my account, pay the gas fees, and then complete the transaction. If you observe, this whole journey of doing a simple P2P transaction is of around 15 to 25 minutes. Wallet addresses are involved, cross-chain complexities are involved, and multiple clicks and gas fees are involved in the native token. But with Fetcch, a network we are able to build with our APIs and SDKs, we make every transaction of a wallet to wallet as simple P2P PayPal or Venmo like user experience of transaction. Think about if you're there on MetaMask and your friend is sending you funds from a Phantom, from a Solana. You can just there type out Mandar at MetaMask and click on a pay now button. Transaction is single click transaction. Funds get settled in the backend itself, and no need of wallet addresses, and whole transaction is completely gasless transaction. How we are able to achieve this and how Fetcch is built out is with a combination of perfect solutions which are needed to scale the payments. That is identity, a settlement layer, and authorizations on a request layer. Everything is packaged into a simple modular SDKs of all of them combined. And this get integrated inside a wallet, payment gateways, applications, and different type of exchanges which forces on a P2P or crypto transactions modules. Identities has a simple, clear vision. Because of our identity APIs integration, user, rather than getting a complex wallet addresses, they get simplified transactional identities like Mandar at MetaMask, Parth at Coinbase, so on and so forth. Fetcch block is a cross-chain enabling layer which settles the cross-chain transaction in the backend. It is built on a top of layer 0 XLR and warm-up protocol. Fetcch pool is an infrastructure level of innovations which we are bringing out with the Fetcch is to enable a pool payments on the top of blockchains. Currently, we all do just a push-based payment on a blockchain. Pool payments will enable you to send a request to your friend, and you can just think about if you're there on MetaMask. I can type out Mandar at Phantom on my MetaMask wallet and click on a send a request button. You just get a pull request to complete the transaction, which can get completed very easily. Currently, we are in beta. We are integrated over 12 wallets. We do $30.5K of transactions a day in beta on an average. We are partnered with a good amount of Web2 and Web3 based applications, payment gateways, and wallets. We already have 64 wallets into our waitlist and 8 payment gateways, which will be get integrated down this quarter. Currently, we are raising our first funding round, which is 1.5 million at 15 million valuation. It is a safe plus token warrant round. We are already backed by one of the finest investors in Web3 ecosystem. Some are HashKey Capital, GravityX Capital, etc. Thank you. Feel free to shoot out the questions and happy to clear your any type of doubts.
Thank you. Thank you, Mandar, for the presentation. Any questions for Fetcch from the audience? Feel free to type that in the Q&A. If you have additional questions or more than typing is available for you, then in the chat there is a link to Fetcch information with the landing pages. Just a question came in from Daniel. Jean, what is the utility of your token?
Yep. So Daniel, the whole infrastructure which I have told you about pool payments and about the identities, it's completely built on a decentralized way using our roll-up based infrastructure. To incentivize our node and validators network, the major utility of tokens come in. And secondly, on a settlement layer, we maintain liquidity pool to make a cross-chain transaction in a fastest manner. And this liquidity providers are rewarded with our own Fetcch-based token.
Okay. Again, if you have any additional questions or want to plan a session, a meeting with Fetcch, you can use the landing page in the chat to get more information about Fetcch. then this would be the end of our 6 presentations. We still have some things in the pipeline for you. And for that, I want to ask on stage Vishal from Graviton to talk about our portfolio management. Vishal, go ahead.
Thank you, Jeffrey. Good day to all. The past 16 weeks have been wonderful. We have had a chance to speak with each founders every week, learn about their product, go-to-market strategies, and their KPIs during the cohort, and do our best to assist them in any way we can. We supported them in many ways, including by partnering with other projects, establishing connections with ecosystems, designating some of the mentors, then encouraging them to meet KPIs, connecting them with VCs, and much more. It has been a pleasure working with all these incredible founders. We are very pleased with the products that are emerging from this cohort, which was inevitable given the founders' prior experiences, knowledge in this space, and passion for their product. We would like to thank all the participants for making this course first batch, which is always special, worthwhile for noting to the most notable VCs and ecosystems in Web3 space. We would like to reassure you to all the participants that this is just the beginning of your journey. Our commitment to you will last for a long time, and we will always be available to assist you in any way we can. And thank you all, and best wishes for your future. Over to you, Arpit, for the closing remarks.
Thanks, Vishal. I think you have covered most of it, again, thank you everyone for joining in. I just want to extend our thanks to all the partners, which are VCs, ecosystems, and mentors who made this program possible. I hope you enjoyed the session. Please do connect with these amazing founders. We would be sharing a mail which will consist of all the information about the startup as well as the YouTube links for you to watch the session later, if someone has missed or if someone wants to watch again. Thank you everyone again. Bye-bye.